What's going on? My name is Amy. Welcome to the channel. I'm normally talking day trading on this channel, but originally I started it at the beginning of the year, or kickstarted my channel, I should say, talking about the investing side of things that I like to do. And one of those factors is investing purposefully so that I can bring in dividends and extra income. Kind of my plan in the beginning of the year was to dollar cost average, and I had cashed out my entire IRA in order to buy back into the market because I saw the downfall and I was like, time to get out. I didn't take anything out of that account. I mean, just that I sold out of, I was primarily invested in S&P 500. And as I started to buy back into the market, I was looking for ways to not only increase via growth, okay, long-term, invest, you hope your money goes further than what you put in, right, and end of the day. And I started looking into certain ETFs, some of which pay on a monthly basis, which I thought was pretty cool. And instead of it being really what they would call dividends, a lot of times they just call them premiums. So early in the year, I invested in JEPI and JEPQ. These are both JP Morgan option call strategy ETFs. So basically, you put your money in this fund. You have to realize that it can be volatile. I mean, they're doing options, right, with your money. And depending on how the market does, depending on the volatility, depending on how, the fund is run, it can affect the performance. But if you're like me and you're like, hey, I want to retire early, you're looking for a little bit of extra fast track to that. And I'm not saying, get rich quick overnight or anything, but it's helped me to add some extra dollars to the accounts from looking at these ETFs and investing in some of them, seeing how it goes. I sold out of JEPQ because I felt like for the capital that you put in, it would go down more than its cousin JEPI. So JEPQ was like NASDAQ, JEPI, JEPI is more S&P, but you got a higher premium per month on JEPQ, but it didn't quite make up for the loss of what they call NAV erosion. So basically, some of these ETFs, you can basically just put your money in and 100%, okay? And by no means am I a financial advisor or an expert, do your own research, but basically you can almost guarantee that these high income, high paying premium ETFs, they will go down. So what you put in, say you buy, at $60 a share, the next time it has a payout, or even before that, it's probably going to drop. It's going to go 59, 58, who knows? But you expect, and this is the kind of investing I'm starting to get into, and it's just a portion of what I like to do, that you will over time get enough payments, monthly, quarterly, whatever it might be, you get enough payments from that investment that it will actually override any capital loss, any NAV erosion. So, you buy so many shares and you stay in the fund for a year, you hope, okay, so nothing's guaranteed in the market. You hope that the time you hold it is long enough that you can override what you're losing if the price of it goes down. And for some things, my kind of time frame is, let's see how it goes for 6 months. Let's see how it goes for a year. Let's see how it goes for a year and a half. And, if it feels just way too volatile, way too risky, and maybe, it's clearly a big gap between what you put in and where it's at now, and then the premiums just aren't offsetting it enough. Yeah, in those cases, you might cut and run. But I'm just kind of getting into this whole idea this year. And so far, I was going to kind of share with you some of the ones I've invested in, some of which I have just first been paid on, and some of them I've had for a little while. It kind of depends, if you have capital that you're okay with it being tied up for a little bit. And that's kind of the whole point of long-term investing, right? And my thought about these is it's part of a whole big picture strategy. I'm not just trying to do all my investing in these in hopes that I get a bunch of payouts and that I make a bunch of monthly income just from that. No, this is more of like, maybe let's look at somewhere between a ratio of 10 to 25% of an account. So I invest in these ETFs in a couple different accounts, and the primary holdings that I have, or the larger holdings, are in my traditional IRA. So let's start with a small account first. This one I just started up like a month ago. And I just call it my long-term investment account. It's kind of my place to put money every month aside, just trying to get to that like at least 10% level. And some months it's like, okay. And some months it's like, well, I might do a little less, but it's just kind of like, let's just grow something, right? Like if I have the money in a regular checking account, I will spend it, right? I need to put it locked up in an investment account. This is a cash account. It's not a retirement account that I'm talking about right now, but it's just better for me. From what I've learned about me and money is I tend to do really well when the money's like locked up, right? So in this account, I have three positions. I'm invested in MSTY, which is a ETF that does options on MicroStrategy, MSTR. That one is a very high yield dividend paying ETF. I'll get into detail in a second. I have holdings in VGT, which is the ETF that tracks, it's a Vanguard ETF. It tracks the NASDAQ 100 top stocks, okay? It is different, very different actually, even though they sound similar, very different than the QQQ. A lot of people will invest in the QQQ because they're like, oh, it's the NASDAQ, I want the tech stocks. That's great, except that you are getting like a much larger bag of tech stocks and NASDAQ stocks. So the VGT one just picks the top 100. So you have less of a blur of, different stuff in that basket and more concentrated. And one of the things I actually really like about it, just found out the other day, that it's got a small position of Amazon, because I hold Amazon separately. And looking at its year-to-date, 1 year performance, even actually looking back 3 to 5 years, it's really not performing as well as I would like. So I was glad to see that one is not in this. I think if it is, it's a tiny, tiny position. And then I have VOO, which is Vanguard's S&P 500 ETF. Both of these, VGT and VOO, have very small expense ratios, which is important when you go to, look at your investments over years. And eventually, you'll see that, okay, the expense for some of these could be close to 1%. And let's say you've been growing that sucker for, 10 years, you got 100 grand in there or something. 1%, that's like a kind of a significant amount. So, 100 grand. So like you're talking $1,000, right? So anyways, those are the three holdings. And then anything that I don't have invested, I have it sitting in a, what does Fidelity call it? A treasury money market fund. That just will pay you interest, which is actually, the interest rate is still pretty darn good these days on cash, close to 4% in my accounts. So anyways, not a lot invested in this account. I won't go into too much detail, but I'll share with you guys like how many shares and stuff. So MSTY, the MicroStrategy one, very volatile. Definitely going into this investment, I was like, I fully expect that my initial investment is going to erode and depreciate. And, of course it did immediately. But that's also because it just had a payout. So I invested, let's see, where's my dates here? So my average cost right now is $20.65. I've got 15 shares in this small account. So you're talking, I didn't put a lot in there, close to like $300. And I'm already down like $26 on my capital just because, once they do a payout, they have to take from the fund, right? So you'll see these fluctuations and you'll see these big drops occasionally. And if MicroStrategy is not volatile enough, because this is actually how they really make the money on this ETF. If it's not doing like this, then they're not able to do, or not able to gather as much premium on this ETF. I don't know the details, but that's as best as I can explain it. So I bought shares on July 28th and July 30th. So I kind of like broke that up, and that's why I ended up with 15 total. And my payout on this sucker ended up getting $17.75 on owning 15 shares at like 20 bucks a pop. So yeah, it paid, what is that, like $1.12, I think was the dividend payout per share on a $20, ish stock or ETF. And the price is currently $18.87, so you can see why I'm already down. But my intention is to generate income, right? Because I want to cut out ever having to worry about a job, ever having to really run businesses anymore. I've been an entrepreneur for 10 years, and I'm just kind of like, yeah, I'm sort of done with that. I just don't want to do it. I just want to have my money work for me. Darn it. So anyways, yeah, so that one paid that. And then I do not have very much in VGT and VOO. Let's see if I got any dividends there. I think it was very small. No, they haven't paid yet. Okay, so I haven't had the account open long enough, or those positions open long enough to get the payout on those, because the dividends are quarterly on those two ETFs. But, they made a tiny little bit of interest money. And let's go over to, I'm going to share with you from my IRA. This is a traditional IRA. I do a lot of activity in this account. And full disclosure, I've had to actually take money out of my IRA to keep myself out of debt. But I'm like, screw it. Like, I would rather be debt free. So, and I am. And that's in the past, past that. And let's see. So, holdings here, I've got a significant position now in Misty on my IRA. But I think just before the payday, where are you, Misty? Just before the payday, I had about 85 shares, because I've added since then. But yeah, looks like I've got, because I added 10 more. Okay, I think I had, exactly 85. Okay, so that one, my average cost on those shares was $20.58. Definitely a bigger drop when you own 85 shares and the stock is down, but it's all good. We're in it to win it. And then that one ended up paying me, literally, I think I bought shares like the day before they closed for the month, where you had to buy by the ex-dividend. Oh, and by the way, this confused me initially about trying to do dividend income stuff. If it's the ex-dividend date, you're too late. Okay, that's the date that's like, hey, you missed the bandwagon. You gotta buy the day before. So if you have an ex-dividend date of July 31st, you must have the shares of whatever stock or ETF by July 30th. And that means before the market closes. So if you buy after the market closes, I think it counts, don't quote me, but I think it counts for the next day, in which case you missed the train. So ex-dividend date is misleading. It's the day before that. Okay, where are we at here? Activity. We're looking at dividends. Okay, so for owning 85 shares of MSTY at about, what did I say, $20.59, I received a dividend payment for 1 month, but I only actually owned these shares probably like 7 days. That was another thing that a wealthy person told me. Let me tell you that in a sec. $100.60 payout for owning 85 shares at $20 and some change per share, which is very high dividend yield. Again, that was that like $1.12 per share payout. Yeah, I was told by a wealthy guy, multimillionaire, that you did not have to own the stock or ETF the entire month in order to get the payout. So some people will buy, the last week of the day before, a couple of days before, whatever it might be, before the dividend. Yeah, again, before that day before the ex-dividend date. and they'll buy in order to get the payment. Now, keep in mind, if you do that, also a lot of other people are doing that. So if you wait till kind of the last minute to jump in, expect to pay a higher price per share or per, whatever you're buying, because everybody else is thinking the same thing, right? And then after the payout, a lot of people are just like, oh, cool, I got a payout, I'm going to sell. So that's why after the payout, a lot of these just go boop. But then they recover and come back. So this one, I like it because I know I'm going to get a payment every month, which is very cool because I'm used to quarterly dividends in most, previous investing strategies. That was always the thing, every quarter, right? They do earnings. Like one of the good ones pays really well is Travelers Insurance. It's a blue chip dividend stock. And I think it pays like $1.06, $1.10 a share. And it's only like $200 something. So that's not high dividend yield by any means, but for a normal stock, it's pretty dang good. And it's not super priced, crazy high. But that's a quarterly dividend. You gotta wait 3 months, right? And if you notice too, like these ETFs, they're doing different things in order to generate the payout versus you investing in a business that may or may not have good earnings. And then that could or could not affect the payouts, right? But either way, there's nothing guaranteed. Even if you've seen one of these high yield ETFs pay a lot month after month after month, they still could have a bad month, and then you're expecting maybe $1 a share and they're like, 60 cents, a share, which is still great. But just keep in mind that if you go this route of looking to, create a portfolio and around dividend income, that these things can happen. So, and okay, so let's see, what else was dividend paid? I don't think a lot of stuff paid last month. Let's just see. Kind of trying to just go back 30 days here. Nope, I didn't get any other dividends in the month of July other than MSTY. I'm gonna go back a little further just to give you guys some kind of context here. Okay, so JEPI, the one I mentioned earlier, I still hold shares of this one, pretty good size position, like 187 shares, I think. And this is the one that does options for JP Morgan under the S&P 500. And they were paying about 35 to 39 cents, somewhere in there, typically per share of what you owned on a monthly basis, your premium. And July 3rd, I got paid from them $75.51. Now, granted, this one is not like Misty. It's not $20 a share. It's, I think, like $56 or $57 a share. So I own quite a bit of it to kind of put into context. And I have not a ton of VOO, but enough where I got a little bit of a dividend payout in July. That one I got $22.75. So that one, though, you're paying $500 something a share, right? It ain't cheap. So it's not like I went into VOO and was like, let's make some dividend money. No, I wanted to track the S&P 500. I wanted to invest in the overall market. The fact that it pays dividend from that, great, and it pays better than VGT, which I have almost a similar position size in, which costs even more at like $6.79. Who knows what we closed at today? And that one, I got a whopping $5.86 on a quarterly investment. Okay, so it's funny because, like I said, I own almost the same amount in both VOO and VGT, but VGT is going to pay much, much less of a dividend. So these two ETFs they're not meant as part of a dividend income strategy. It's just nice that they pay a little. So keep that in mind. And this whole idea of like retire early and stuff like that, it's like a wheel. Like I got different spokes kind of like working together for me in different ways. And then, I tell this to people in Amy's Trading Tribe, which I also, by the way, have a spinoff group now on Telegram, Amy's Investing Tribe, which you can join once you join the Trading Tribe. There'll be a link, and that's all on Telegram, free to join down below. And yeah, I'll tell them like, make sure that whatever money you don't have invested and it's in a brokerage account, pretty much all the major ones should have this option where you can convert that account, if it's not already, into a money market fund. Your money is totally liquid in most scenarios, and you can take the money out, transfer it to your bank, whatever. But it is gonna then earn interest. Is if you don't, and I didn't realize that Schwab had one for the longest time. I'm day trading out of the account and leaving like, a couple $1,000 sitting in cash, and didn't realize I wasn't in a money market account. But yeah, just you can get close to like 4% interest right now. So when you're not invested, make sure it's in those cash accounts. They call them sweep accounts, because basically if your money's sitting there in the account and it's not in a stock or an ETF, that brokerage is like using your money for other things, right? Like it's still there, it's still your money, but just keep in mind that you could be earning interest because they are earning interest basically off of you. And let's see, I don't think I had any other payments. Oh, I take that back. Okay, well, it was paid on June 30th. Another holding that I have is an ETF. It's a much safer investment in terms of capital erosion, NAV erosion. But they decided to restructure this fund, SCHD, and the reason I invested in it initially at the beginning of the year, I think like around February, March, was because it held a lot of blue chip dividend paying stocks. And what did they do when they restructured it? They took out a bunch of them and threw in energy stocks. And I'm like, why? Because energy stocks have not done nowhere as near as the market has done this year. They're volatile. They might pay dividends, but they're your capital's at risk. So I'm actually negative on that investment, which should have been slightly appreciated by now. So I started selling out at break even, or just tiny little losses here and there of SCHD, because I had a really large position in it, thinking, oh, it's a safer place to get some dividend income. And yeah, when the payout came, it was lower than expected. Plus the growth was down. It wasn't growing at all. So I'm like, no, this one, I'd rather put that money into the riskier, like that pay a lot, right? Why get paid less and, and have your money still dropping? So I think this one, I have to look it up. I think it was like 20 some cents a share. But SCHD doesn't pay monthly, it pays quarterly. So I got $88.99, and I had well over 200 shares in there. So it's kind of funny. I have that many shares on it's at like $26 and some change. And you average that out, just say like $90, right? Over 3 months. So $30 a month versus something like MSTY that paid me $100 for owning 85 shares, and it paid me that in 1 month, okay? And it's funny too, because I'm almost negative as much on each. It's like the negative drop, NAV erosion is about almost the same, which I think is ridiculous for how low SCHD is paying me. So my intentions with this one, because of that restructuring and how I just don't like where it's going, and it's not even performing like close to the S&P right now. That one I am going to scale out of slowly. I kind of have to hold on to it for a little longer for the shares I still have. I sold like at least half of what I owned, but I have to hold on to it a little bit longer, because if I sold everything now and took a loss, I basically be break even. Like I didn't make any dividend money off of it. So anyways, guys, hope you enjoy this kind of content. I really enjoy talking about it. As much as I love trading, I also love investing, and I love finding ways to make the money work for me and you. So again, not financial advice by any means. I'm just sharing the journey here on the YouTubes, and hopefully, you're entertained, informed, a little inspired, maybe. Let's get it. Let's cut out of this early, y'all. Like, I'm like, screw the whole idea of you got to wait till you're, what is it in these IRAs? It's like 59.5 in the IRA to take out your money. You got to wait till, I don't even know, because I haven't had a regular job in so long. What is it, like 66 and some change to retire from the workforce, get your full Social Security? In my opinion, I kind of just look at Social Security as like, cool, if the government wants to pay me a little extra every month, but I am by no means relying on that income at all. Like, who knows by the time I qualify, if it's still around, if it pays anything. I'm just glad that, you know, I have these other ways and means of producing income, as do you. So hope you enjoyed the video. I will keep sharing about this stuff. Feel free to share like what's working for you, any questions you have on these, you know, high yield paying ETFs, or if you have other dividend income stocks you want to suggest, feel free, put them in the comments below, and I'll see you on the next one. Take care.